Welcome everyone to the Kendall Report. It is Wednesday night. What a day, huh? When I put that thumbnail out last night, can the market break out? Didn't know we were going to have such a huge day. May have to excuse me a little bit. For some reason, my allergies are starting to kick in tonight. Haven't bothered me all day until I come live. So hopefully we don't have to pause. That's why it took me so long to get on. Anyway, folks, welcome. Make sure you hit that like button, subscribe, all that good stuff. We're still stuck at 32.8. It was funny. I got an email from someone the other day that said that they put their VPN on. They're overseas. They're in Europe. And all of a sudden it went from 12 videos to 990. So something's going on with the channel for sure. Anyway, keep subscribing. Maybe we can break this thing. Anyway, folks, crazy day today. We definitely got a little bit of a squeeze going on, and I think it's likely to continue. There's a couple numbers that I'll discuss tonight that are going to be really key. And I can tell you, I just did a review of like a lot of weekly charts, something I don't show on the channel very much, but going through the Wavetech webs, maybe I'll feature those at some stage. Those of you who've been in the live room know about them, but man, all these markets are looking super, super bullish. My head's about to pop off. Germany last night was up 1.2. That probably led the way to what we saw here today, because once I was up watching London open, and as Europe opened last night, we definitely had a huge bid in there, and they couldn't come up with a negative Deutsche story to try to roll the market. Pretty much that story's over. The bank story's over. You don't hear anything. I read through some commentary, just aftermarket commentary. Nobody's mentioning banks or anything. In fact, the KRE, which is the regional bank, and the QABA, they're both starting to bottom already. We're starting to see some short-term buys come in, all kinds of stuff. And you'll see here in a minute when I come to the database, get through the database, you'll see we're starting to get some really good traction there as well. So things are starting to happen, folks. We're coming into April. We got 2 more sessions to go in this quarter, and I think everybody's trying to figure it out. Today was a pretty interesting day to see the squeeze, but I think it was all about Europe, because if you think about it, the commentary that's rolling around out there really is talking about, Europe, and the banks in Europe aren't as good as the U.S. and all that stuff. They're trying to get this story to have legs further than what it had, and it's just over. People can call it a bailout. You can do whatever you want. Somebody said, what would the market have done if there hadn't been intervention? It doesn't matter. There was intervention. It's sort of like going back to 2008 and saying, what would have happened if Paulson and the guys didn't bail out the banks and bail everything out? Because if that didn't happen, AIG was the biggest thing in 2008. If they didn't bail that out, it was over. It was game over. It would have made 29 look like a joke. But the realities is that these things matter that they happen. It doesn't matter if they didn't happen, because they did happen. So don't spend any time thinking about that. Go with what's in front of you on these markets. That's one of the things that you learn after being around for a long time. You don't need to contemplate what if they did something different. They didn't. As I used to say in the old days, the tape is right or the market's right. Don't worry about those type of things. A couple other things just on this overall scenario that's unfolding here as we come into the last couple sessions. As I said, I'll mention a number. I'll mention it right now, but I'll talk about it, the importance of it in a minute. But 4082 on the E-minis or on the futures will be key to this market. If we can get above that, then that's going to start to change things pretty substantially as we come in to April, and I think it's going to get pretty interesting. So let's take a look at some of the things that came out economically yesterday, just to cover that. From an economic standpoint, we got mortgage apps up 2.9%. I said this is kind of an interesting stat. Well, that sounds pretty good, right? A year over year on mortgage apps, they're down 35%. So Paul wanted to get a whole bunch of people unemployed. They definitely got the mortgage guys unemployed. Listen to refi number. Refi numbers are down 61% year over year. Like, why would you be refining? You're not going to. And I'm shocked that it's only 61%. That's not 100%, because you look at it, well, I guess at some point there was still some opportunity depending on what type of mortgage you had to refi, but that game's over, right? So the refi market is completely done. Now we're going to have to rely on turnover, existing home sales and new home sales to keep the mortgage market rolling forward. And that's likely to be slower, but improving from the terrible levels that it got to. That's my point when I'm telling you I think that the retail real estate market is starting to bottom. That's the case. I'm sure, folks, as I'm sitting here right now, we will have issues going forward with commercial real estate. There's a whole bunch of scripts that are going to get played along the line as far as things that could disrupt the market flow and all that. I did notice somebody was talking about, they're tech heavy in their 401k or something. Should I be buying? Don't buy any puts yet. I think the whole scenario that's unfolding here is getting more and more bullish. I know now I guess you can start to label me. I've said it at least 4 times already that things are really looking up. That doesn't mean it's a straight line, but it does look like we're getting database rotation. We're getting all the stuff that happens. We got one more day, and we come into Friday. This coming week's rotation on the intermediate database is going to be extremely interesting, and I'll have my eyes on that. We'll be talking about that on Sunday night. Let me look at my notes. Home sales were up 0.8 also in yesterday's economics, but the expectation was a minus 0.23. And I told you last night when I talked about that number that I thought that would come in better, and it's once again that bottoming in the retail. So Thursday is the typical Thursday, very little coming out. Claims expected to be at 196. Continuing claims were last week at 1.694 million. Only number that concerns me here is 2 million. We're going to stay under that for a while. We get I think the 4th revision of the Q4 GDP expected to come in at 2.7. This is going to have no effect. There's not going to be any material change there. There's no way for it to be. That would be shocking if that happened. Deflator is expected to come in at 3.9, and like I said, there's nothing here. So it's all about right now, folks, about this quarter in window dressing that could come in. I still think we saw maybe some of it today, but I think most of the action today was how the European markets traded. And they came in about 0.2, 0.3 higher initially, and they just kept getting more and more traction. Like I said, they couldn't come with any kind of story, negative story on Deutsche or any kind of bank story. They couldn't dig one up. And we're already seeing changes at UBS, and they're shuffling the deck already at the top end of the heap there. So they're bringing in some old players that they're familiar with to run the operations. So just looking here at my notes, just a quick review is the S&P was up 1.4, NASDAQ up 1.79, Russell 1.08, and all 11 sectors were positive yesterday. And so you can't ask for a better day than that. It was, we printed RTX, actually above RTX, and we'll discuss everything. So let's go ahead and take a look at the database. Should be able to get through tonight's stream fairly quick. So off we go. So we are up to 31.87. We had 2,994 buy signals for tomorrow's opening, only 105 sells. There was a huge tranche of buy orders coming in, all coming in on our aggressive model of 1.2. Typically, it's a little more balanced there. So when we see a big tranche come in on the 3.2 model, that will have more of a material effect on the short term. But regardless of that, we had something happen here. As let me go full screen. I'll show you that we have right now. We have 2 sectors long. These came in the last 2 days. That's why I'm telling you this market's getting a lot of traction here from the standpoint on the sectors. So right now we have a total of 7 sectors, 7 sectors long. And here's the new sectors: basic materials, capital goods, conglomerates, services, and transportation. New buys for the morning. We have 2. That'll put us up to 7. And like I said, we're at right now at 31.87% bullish. So we're still below that 42 number, but we're starting to see this is actually a classic scenario here from the standpoint of how this thing is trading. and how it's coming back online is that we get all the sectors are coming in, and now the stocks will follow. I suspect we're heading 442+% bullish here over the next couple of weeks. It doesn't look like much is going to change on the trajectory of what's going on with the database. And like I told you, if we go back when we were printing down into the low single digits, you'll recall I was telling you it takes about 4 to 6, maybe 8 weeks to rebuild this. We're in this thing right now about 4 weeks. So in the next 4, so coming through April, we're going to rebuild this thing. Probably in the next couple of weeks, we'll see this thing jump back above 42%. That's my expectation. We'll see if we get that. And it looks like everything's lined up pretty good right now. So I don't see anything to change that as we go. All right, so we'll start off with where we always start with the hourly chart. It does appear, and I'll go through the details here in a minute. We did get an RTX sell signal. They're not as positive as the STX buys, but we did get one. We're a little bit negative right now by just a couple handles, but we're looking at the hourly chart here. This 10-period moving average should stay as support for the next couple hours, but it looks like tonight we could break down and head toward the 21-period moving average, which is around 42. But remember, it is rising 2 handles per hour, so probably looking at 46. We'll look at the market grid here in a minute, just so you have a good handle on that. But the bottom line is this trend is still expanding to the upside. We come all the way back. This was, I put my cursor here, and last night when we saw that reversal, I thought we'd rally into, we were projecting a rally into London. Well, it just extended, and all of this extension, including all of yesterday, had everything to do primarily with Germany led the way, the DAX led the way, and everything else followed. The CAC and the FTSE all were following. Thanks for the super chat there. But the bottom line is this market should, you can see the angle of attack here. We should at least stay above this 21, maybe get a consolidation. I don't see a big rollover by any means here as we come through the night. Let's go ahead and take a look at the daily, and then we'll take a look at the market grid. There's a couple of things that happened that I've been talking about going back probably a week or more. These, let's see what day it was, back to March 23rd. I'm sorry, the 17th. And that is where the Fibonacci targets came out. The targets were 39.96, 40.57, and 40.94. Well, we hit yesterday, we printed up all the way to, let me get this number here for you. We printed up to 61.25 yesterday. So we printed right up into that 57 fib target. There's one more target up here, and you'll see the market grid has turned up. So we're the final target is 40.94. I mentioned a number a few minutes ago, which is 40.82. And you see there's some downward projections here. This 40.82 level was this high back on March 6th, and that swings this whole pivot to a new number. And what I'm waiting for here, and we're very close, this number here, 73 and 82 are going to be key triggers in this pattern. I'm going to draw something in so that you folks understand the potential for this squeeze on the upside here. And the squeeze is set up right here. This will be a new pattern that will emerge here. We have basically 1, 2. If you've been in the live room, you know I talk about this pattern all the time. So the next projection would be for a simple 1, 2, 3 pattern, which ultimately challenges these highs over here. I'll pull these up. I can't get to the numbers right now. I can show you the formation here. But this is really the pattern. It looks like once we get above this high, we penetrate these highs here, the projection is going to suggest that we should get some new Fibonacci targets here. The algos will pick this up and we should get some targets here. The only thing that is challenging here right at the moment is what I'm about to show you. It looks like PPM 1 is actually downclicked today, but we're seeing further acceleration on PPM 2. And I've been talking about these moving averages. They're not a very robust trend at the moment. And we are above all three averages. We're above the 40, which is at 40.30. We're above the 21, 39.85. And the 10 period is at 4,003. So we're likely to stay above that. I'll bring up the market grid here. Let's use market grid. It's over on, actually, you cannot see it, over on the far left-hand side. Oh, you can. I had something in the way. So, yeah, so S1 is 40.47. That's the number to watch on the downside. We've printed down to 52 already tonight. I think we get, there's a potential to get an S2 print down to 40.35. These numbers have contracted a lot. So the volatility over the last several sessions, we had two very narrow sessions. Yesterday was an expanded, but what we're looking at is the volatility has narrowed just a touch, and that's making it possible for an S2 R2, which is 40.80, and S2 is 40.35. If we break through 80, then we'll probably challenge the 41 handle. And like I said, if the squeeze is on and you can scare a few of these folks, especially a lot of the folks that have been just buying into this banking story over here in the last couple of weeks that have got caught short. You may recall a stream that I did a couple of weeks ago, how the shorts will lose. And it certainly looks like they're about to get squeezed. They haven't seen anything yet, because if that pattern I just showed you starts to unfold, it will happen fairly quick, and we'll get a fair amount of traction in database, which will trigger over into the weeklies and all of that. So what I'm going to just talk to you about here from the standpoint of what's going on with this pattern is I'm just going to go through the dailies tonight. I don't think we need the perspective of the weeklies. There is the 41 handle is going to be the next big target. So I've made it clear 40.71, 40.82 are your key resistance points. Watch for rejections around those points. If they break through, then you're heading for the 41 handle. And like I said, 40.97 is at fib target 3. So if it gets there, it won't stop. I don't think at that level. You'll probably get above that level. And you're looking at 40.92 is R3 for today. 41.02 is our RXT. But like I said, look at S2, R2, that's 40.80. That would be a new high from yesterday. Would be below that 40.82 number. I think these numbers get penetrated. Just like I told you yesterday, I felt like there was a squeeze coming on. We got a pretty good one. I think once again, you have to look to Europe right now for guidance. And I won't bring up the DAX and some of these other indexes. But I'm just telling you that a lot of that flow is happening, and it was relentless last night. Because no matter what you tried to do, there was finally a reaction off of the open yesterday, where we declined just a little bit off of the highs before we rallied and just went steady on heading for RXT yesterday. So just know that that's where you need to pay attention to. If you're in Europe, you'll be wide awake watching this stuff, and the rest of us will be sleeping while it's happening. But the bottom line is that will be the key element to watch from that standpoint. All right, well, so we'll take a look at the daily NASDAQ. NASDAQ continues to climb. I've been talking about this lack of momentum growth here, which is trying to peak on the PPM2 as well. So we're seeing the stable, this is the daily chart, stable on PPM1, projecting still positive, staying above the first derivative here on here, and we've got positive PPM2s at a plus 0.37, and that's tracking this 21 period moving average. So it's way below the market. We're at 12,506 on that average, but the key number will be 12,808 on the 10, and we also have the market grid in play right there, because you're looking at right now RTX 12,741, R3 S3 STX, I'll get this right, STX is 12,741, S3 is 17,400, but once again, probably look at the S2 12,858. That puts you right to the 10 period moving average. We should stay above that. On the upside, R2 is 13,076, and then R3 13,135. So I would expect to see the same thing that we're looking at here on the S&P, probably an S2, R2. Like I said, we've seen a contraction of the volatility in the last couple of days, but everything still looks positive. We're not getting a lot of upward projections anyway for the 40 period moving average, and that's a bit concerning. We still have a what I call a live projection. A live projection on the fib targets on the downside. We're looking at, let me just bring this up, 12,004 down here at the 40 period moving average. I don't think that's in play right now. Like I said, unfortunately, it looks like Europe's going to have to be the leader at this time. All right, so we'll go to the Russell. Interesting, we got some new fib targets. They're pretty tight, though. We're trying to get back towards that 200 period moving average I was talking about. Right now, that number, is around 1838. We have some fib targets, high target 1788. We've basically met that. Have we met that? We're very close. We're 84 high. So 88, but then 21 and 41, that puts us right into that 200 period moving average. And I didn't mention this on the other indexes, but we're seeing a pretty explosive move on the very bottom indicator here, which is the PPM 200. And that is significant in that means that the 200-day moving average is starting to slope even faster than it was before. That's going to cause the market to want to normalize, and it wants to be around that average or above it. So we get a little fluctuation in here where the market gets a little bit out of balance here, but it wants to be back up here at this 1840 plus on this level. So it wants to normalize in here, just like we did over here earlier in December. We got below there and we kind of normalized, and then we got into an uptrend. But right now it looks like with the downward slope 21, we're looking at the range right now of the upside here is right at that high Fibonacci, which is 1841 with a possibility of around 1860. So we should continue to move toward those numbers as we go forward. All right, so next we'll cover the treasuries, kind of still remaining above the 200-day moving average here, which was kind of that same situation here. If you notice, we've been waffling on either side of this, and this is really, this market's right back to where it should be. The algos are suggesting stability, and looks like it. This 21 is coming down in here, so at 367. That'll probably be 365. That's going to be your breakout point, and then ultimately you're probably looking toward 371 as a somewhat of a cap on this market at this time. Let's take a quick look at the Let's take a quick look at the 10-year, same scenarios happening. This is kind of that imbalance that we're seeing of markets getting down below here, and they want to respond, get right back to this range. So this range of the let me draw in something here just so you can see this, but this entire range right here, from the standpoint of the market wants to be really in between. All of these averages have merged, including the 200. So everything's coming together here. Just like if you look over here, and this was where we got into a normalization of along the shorter term averages, and then this ultimately the market was way above the 200, so it's back to it. So this trajectory, and that's, we're not getting the acceleration like I just showed you in like the indexes and the equity indexes, but it is showing that we're going to at least stay stable here. You can see how the algos are projecting out. This is a little far, but all of this should continue to normalize here, and this is the same thing on the 10-year. You can go through almost every treasury, and this is what you're going to see in this pattern. Next, we'll go to the crude oil. Crude oil, as I mentioned last night, we're kind of topping out here. We should set up, I believe, I'll show you something. I'm doing a lot of drawing tonight, so let's take a look at this. This pattern here, this was the pattern that was projected. You can see these green dots in here. That's that 3 pattern that I was talking about. So you'll get, we actually satisfied, we went to fib target 2 in here, and so we should see, I think, a further evolution of this pattern where we get maybe something like this. We get into a new box formation, and then ultimately we decide which way we go out of this box. But I think we got a consolidation. We printed up into that 74 level that I was talking about. So we kind of satisfied at least this particular situation here from the standpoint of markets. Let me just blow this up a little bit. You can see this matrix just a little bit more in here. You can see right in here that we came right into that number, the 74.23. High was 74.37, so it was really pretty much spot on that target. And those targets came out when we were trading at 69. So like I said, most of this is satisfied. Don't see anything big there. I'll just stick to the daily on this tonight, and I'll cover maybe at the end of the week, but probably Sunday night I'll go through the weeklies. I try to go, and Sunday night's going to be a new month, so we'll go through the longer term stuff as well. So should be interesting. On Sunday night we'll have the monthly numbers, a whole lot of stuff to go through. Okay, so gold is next. As I mentioned last night, we're still climbing this 10-period moving average. It does look like this is probably about the last day of this scenario where we should start to come back in, maybe toward the bottom end. There's some fib targets here. 1963, 44, 32. We probably should trade down into that range. We've just been really hovering right along this 10-period moving average. You can see right now the 10 is at a 0.26, so that is trend mode. So it will take, it probably won't be until around, I would suspect after tomorrow or Friday's session that we'll see this start to roll over, and we'll probably see some downward pattern. If we just take a quick look at this overall pattern that's going on in here, this is what's happening. We're looking at, this was the RTX sell signal, and basically since then we're getting this pattern here. There's probably one more pattern. It's probably an ABCDE pattern if you're into Elliott, and then possibly up. I think the key numbers to watch is going to be the 21-period moving average, which is PPM 2 is up at 0.32. And ultimately what we want to see is that the PPM 3 down here, it is projecting an acceleration to the upside down here on PPM 3. So we need this 40-period moving average start to roll up here, and then this pattern will make sense. But the 21 is going to be the dominant average in this type of pattern, and we should hold that as long as you see the PPM over here is right now at 0.32. I think as long as we stay above 0.25 in this pattern, and we should get a bounce off of that. And I will give you folks an old rule that was developed way back in 84 or 5, is when we were first starting to study these moving averages. One of the cliches that we had, the first bounce off the 21 is usually a new high. So usually when we tag it for the first time, you'll go to a new high. If that's the case, that'll come into play, I don't think, until mid next week. So expect this to kind of continue in this sideways pattern. Look at the 20. We'll talk about it as we get close to the 21 for a bounce. And from that level, if that's the case, then we could set up a very large one of these 1, 2, 3 patterns that could project prices quite a bit higher. It's kind of, like I said, we'll go through weeklies, monthlies. We'll do, get the popcorn out for Sunday night, because I'm going to have to go through all of the long-term aspects of that. And that'll be key. Also, I'm going to be out of town a full week in April, so that's going to make things interesting as well. So I'll definitely keep a long-term perspective, so you folks have at least an anchor on some of these longer-term numbers out there. So let's take a look here and finish off at Bitcoin. Bitcoin had a big day. It's correlated right now with the stock market. It's interesting if we look back on the last several weeks, looking at this daily chart here, the surge in prices, Bitcoin became the alternative asset out there. And many folks were talking about that. Then we get into sideways mode. And now we're kind of more correlated back with the equities again, like the last time. So the thing that I've been talking about, somebody was talking about on Twitter that I said it was going to go sideways, but it's up. From my standpoint, I'm looking at it's still in a sideways mode. It's really not broken out of this pattern here. We're right inside of this box here. So this is the consolidation that's happening here. So this is a really tight kind of pattern. Maybe there's one more down into this. I've been telling you that the number to watch, and the number to watch is this right here, this 21 period moving average. It's 26,174. That should continue to rise. You can see down here with the algos, you'll see that it is continuing to rise. It's not even projecting for, this is dailies, for 2 or 3 days to even break its first derivative. If that happens, then that would suggest maybe a little bit of a move down to test this, and we'd have to break the second derivative, which is projected further out. These projections get fairly inaccurate. You've got about 3 bars that you can look forward, and that's pretty good. It's like sometimes it's like having tomorrow's Wall Street when you're getting these algos projected. So anyway, just know that that's kind of what is being projected at this time. And so the sideways pattern is really just locked in this box. I think we could come back down below the 10. We're still positive PPM1 over here. If you look at this, you'll see PPM1 is at a plus 0.18. Anything over plus 0.15 is strong enough to be a support line. So we traded below it 2 days. We hovered. I talked about this the other day, and let me clean this up a little bit. Just like gold, we hovered right along this 10 period moving average here on each one of these sessions. And we had 2 days below it. Now we're back above it. I think what we're doing is just continuing to fluctuate around this upward rising 10. And as you can see here, the algo is flat. So it's trying to maintain enough that it's going to be a support line right there, which is 27,796. But the big number is this 21 value, 26,175. And it is rising every day. So let me clear this out just so we can get a number on that real quick here. Yeah, it's going up about $500 per day. So all of a sudden, 26.1 in 2 days, we're 27.1. So this is going to come into play here in the next few days. And it, like I said, it looks like it's going to stay very positive, even at least for another 3 to 4 sessions. Okay, folks, that shall do it. I'm just looking at some of your comments. Oliver, good for you. Glad to hear it. Yeah, I'm just looking at some of your comments here. Just see if there's anything in here that we can talk about. Okay. Yeah. So, yeah, anyway, appreciate it. Somebody made a super chat. Who was this? Single Cello. Thank you for that. Yeah, I had a couple comments. I'll try to be active on Twitter. It just, sometimes there's just things that are popping out, and I try to give you at least some guidance. I don't like to do a lot of that stuff on Twitter. It's just, it's too risky, and trying to get information out on a timely basis. It's okay, but sometimes while I'm writing the tweets, things have already happened by the time I can get them out. And if you use Twitter, you know they have the little cycle. It takes, like, once you click it, it still takes another 30 seconds before it goes out. But anyway, folks, like I said, we're coming into Thursday. We got 2 more sessions, so look for look for those numbers I put out there. 40 on the S&P, 4071, 4082. That's going to be the key levels to watch tomorrow. If we break above that, that's going to negate downside projections that are still out there and a whole lot of other stuff. So we'll discuss that tomorrow night. As always, hit the like button before you leave. I don't know how many likes we have. There's not that many people watching tonight. You'd think they would be hanging around more. It was pretty good, pretty excellent activity here in the last several days. So anyway, folks, thanks a lot. I will talk to you tomorrow night, same time.